Ladies and gentlemen, we're happy to welcome you to the Reed and Christine Halladay Executive Lecture Series. We're thrilled you'd be here with us. Next week, I will not be here with you. This course will go on. Jacob Zabrowski will be introducing our speaker next week. I have the opportunity to be trained as a Strength Finder coach. For those of you, how many of you know something about Strength Finder? Any of you? So I get to go to a conference next week and become a little bit more equipped as a Strength Finder coach, and I'm really excited about that. So I will not be here, but the class will go on, and attendance will be taken, and we'll know whether you're here or not. So thank you. We're glad you're here today and excited to have our speaker with us, but I am not going to introduce our speaker. We have Skylar Payne, who's a professional planning student here at UVU and is this year's president of the Financial Planning Association. He's also a presidential intern, is that correct? The Professional Financial Planning Student Association was created to enable students to make the most of their experience at UVU in the PFP program through career development, engaged learning, and through cultivating relationship with peers, faculty, staff, and industry professionals, and also introducing a speaker occasionally. After graduation, Skylar plans on attending grad school to receive his MBA. So I'm going to introduce Skylar, who will introduce David to you, and then we'll have the lecture. Those of you who are going for lunch with us, we're in a little different location, so just meet with Haley after, and we'll go to the lunch together. Skylar, please introduce David.
I don't know if I deserve the clap. No, we'll save that for David. But David, we're really happy that you're here. David Canter is an Executive Vice President and Head of the Registered Investment Advisor, or RIA, segment for Fidelity Clearing Custody Solutions. In his role, he is responsible for the growth and the retention of the RIAs and record keepers on Fidelity's platform. David leads a team of hundreds of associates who provide RIAs access to a flexible, open technology environment, extensive practice management resources, wealth management investments, and related execution and custody services. David joined Fidelity in 2009 and prior to his current role, served as Executive Vice President of Practice Management and Consulting for Fidelity Clearing and Custody Solutions. Mr. Canter received his Bachelor of Arts degree from the University of Wisconsin in 1990 and his Juris Doctorate from the University of Baltimore School of Law in 1993. He currently holds his FINRA Series 24 and is a member of the State Bar of California. On another note, he is a passionate marathon runner. He's not just a successful businessman, but he's a passionate marathon runner as well as the lead singer in a rock band. And maybe he can talk more about that a little later. But without any further ado, we can then turn the time over to David. Welcome, David.
Thank you, Skylar. Can you guys hear me okay? Oh, excellent. I got up and my microphone fell out of my pocket. So it's a pleasure to be here with all of you, and I'm really honored to speak before this audience. I love your campus, my first time here. Go Wolverines. Luke Dean, who I met probably about 5 years ago, attended an event we had in Boston, really talking about next generation talent in the financial planning and the financial services business. So, I want to thank Luke also for having me here. So it's great. Here's what I thought I'd do. I wanted to kind of break down this talk into 5 parts. I wanted to tell you a little bit about myself and, my history, which, is not my favorite topic, but just to give you a little sense of who I am and the context of my career. Talk to you a little bit about Fidelity and the business that we do at Fidelity and how that fits in. I also want to talk to you a little bit about leadership because we're all, whether you have a role that classifies you as a leader, we're all leaders, and I'd love to talk to you a little bit about that. Talk to you a little bit about the business, but how it relates to sort of the broader society and the business that we're in at Fidelity, and then leave time for questions. So I'm a firm believer, and maybe this is a little bit of the leadership piece. Whenever you talk, you should endeavor at least to, do 3 things. Tell them what you're going to tell them, and then tell them what you told them. So if you do nothing else, that's always good. It's a good framework. And then years ago, I had an opportunity to visit with a guy named Guy Kawasaki. And if you don't know who Guy Kawasaki is, he was the early Apple person. He was actually their sort of first chief marketing officer, and he later held the role of chief evangelist. And he has this other rule, which is, it's called the 10-20-30 rule, which is, never have more than 10 slides, never speak for more than 20 minutes, and then make sure that your slides are at least 30-point font. Now, having said that, I'm probably going to speak for longer than 20 minutes, and my slides are, a lot smaller than 30-point font, and I think I have 42 of them, but I'm not going to cover all of them. So that's unfair. And by the way, I'm going to save time for questions, but I'm open to, if you have questions, let's do it throughout. So a little bit about myself. I've lived in 7 states in the U.S., but most of the time I lived in California, lived in the Bay Area. I love coming to Utah. I love coming here because it's sort of the gateway to Montana. We spend a lot of time here as a family. My wife's from Montana, and we call Utah Montana with jobs, because there's not a lot of jobs in Montana. But my wife's from Helena. We go to Montana at least twice a year, and the Salt Lake Airport is very familiar to me. But my wife and I have been married 21 years. We've got 2 kids, a 16-year-old, a 14-year-old. I'll talk a little bit about them in a second. I began my career as an attorney. So I graduated college. I went to law school. One of the reasons I went to law school is just sort of where the economy was back in 1990. There weren't a lot of jobs, and it was a chance to sort of further my education. And from there, I started practicing law, and I'm going to tie a couple Utah things back. One of my clients, back when I was in California, and this was in like the mid-90s, was a little company called 1-800-CONTACTS. So I don't know if you guys have ever heard of 1-800-CONTACTS, but the founder, the CEO, a guy named Jonathan Kuhn, is from Utah. It's a Utah-based company. So I had the opportunity to get to know Utah a little bit better, and the great business climate. It was sometime, maybe if you ever want to hear a story about how I got to know him and representing 1-800-CONTACTS, it's a very, very interesting story from my perspective. Because before people got web domain names, whatever you choose, NFL.com or uvu.edu, the big way to sort of brand your company was through what was called alphanumerics with telephone numbers. So think 1-800-CONTACTS or 1-800-Holiday Inn, or I think you get the gist. So a little bit more about me, and then I'm going to sort of pause for a second. So after I was practicing law, I started getting involved in this sort of financial services space because I was doing a lot of real estate and corporate formation work. And I had these folks that came to me when I was a lawyer that said, we want to start something called a registered investment advisor. And I had no idea what it was. But like many of us, on-the-job training is probably the best training you can get, and you just have to figure it out. So that's what sort of led me into this registered investment advisor space. And that's another way of saying, the financial advice business. And I'm going to talk a little bit about the financial advice business more later. But, and from there, I was fortunate enough to start working at Charles Schwab, another great company in the financial services space, and then worked at a couple of financial advisory firms before, as Skylar said, I joined Fidelity back in 2009. So that's a little bit about my career. I told you a little bit about my wife. She's from Montana. She's also a professional. She works at a real estate company in Boston. If I didn't say that already, we live in Boston now. We do miss California, though, because it's cold in Boston. It's very cold in Boston. But they've got some great history, great sports teams, and so forth. Quick word about my kids. My daughter's 16. She likes to ride horses. She does something called 3-day eventing. This year, we bought her a horse, thus guaranteeing that I will never retire. I'll have to work forever. And thankfully, my son, Nicholas, only likes sports with balls. So it's a little bit more economical. And then finally, the last thing about me, and by the way, this is such a treat to get to talk about me, because I don't usually get this much airtime. I love to play guitar. I own 14 guitars, mostly rock music, but a little bit of country, and I'm in a band that's called High Fidelity. And I'm not the lead singer, I'm a lead singer and backup singer. So let me transition a little bit. Let me talk to you a little bit about leadership, which is a topic that, we've spent a lot of time on it with our team at Fidelity and, certainly with, our businesses. And I'm going to transition to Fidelity in a second, but I'd say notice the word that, is used, and that's we. I think, and oftentimes leaders forget this, but it really has to be about the we, because a person who is not thinking in terms of the we is just one person walking down the street, and you never can see if they're going to have any followers. And I would say another big part of leadership that at least I believe is that you have to be a leader, you have to also be a good follower. You have to know when you need to, sort of stand out of the way and let others be part of the team and take you forward. Another leadership principle that I think is, at least when I was starting out, wasn't as much in vogue as this concept of the round table. So that's something else I believe in too, is that historically leadership has been about this pyramid, right? And the leader sort of sat at the top of the pyramid. But if you think back to at least the legend of Arthur, of King Arthur, and Arthurian legend, that was this notion of a round table where everyone had something to contribute. So it's something I think we try to be very vigilant of and to be very thoughtful around, because everyone has something to contribute. And Tom was talking about Strength Finders a minute ago. And Strength Finders, which I think is an excellent program, helps you realize that, all of those around you in a team have different strengths. And recognizing those strengths and then bringing them to sort of the best utilization as a group is how I think you really truly build, the best teams out there. So, you don't have to, I think all of leadership, you take what you believe and you use some of it at sometimes and some at other times, but those are some of the things I believe in. Let me continue a little bit on. I think leaders, and we're all leaders in all parts of our lives or in some parts of our lives, I think you need to have at least five qualities that you're paying a lot of attention to. And I'd love to hear if you have others that you'd like to bring up. But I think to be a good leader, you have to have a vision. You have to have a vision of the future and what it's going to look like. And you're never sure if it's going to be the right vision, but at least it'll give you a framework. And if you think about the leaders in our society, whether it's politicians, whether it's the clergy, whether it's corporate leaders, whether it's teachers, professors, having a vision matters. The second part is, I think you have to have some optimism about the future, because no one's going to follow you to a future that isn't at least hopefully brighter than today. And that's, a big part of, I think, what a leader has. You have to breed optimism. Now, it doesn't mean you have to be Pollyanna and think that, everything's going to be gumdrops, lollipops, and sugar plums, or some of the other candies from from Willy Wonka. I still love that movie, by the way. But you have to have a positive vision for the future. I think the third thing that I think good leaders should think about is communication. To be a good leader, you have to be able to communicate as concisely as possible. It doesn't mean that you have to be the best orator or public presenter, but communication is important. I can tell you, for example, with our group, I try to at least provide sort of an update to the team, which is several hundred people in our business, monthly about what's happening. And I try to make it be not just my view of what's happening, but our collective view. So communication is key. A fourth that I'll share is preparation. So, you can never prepare for everything, and you can't. But if you prepare, it'll at least give you a framework to respond when, you don't know what's going to happen. And actually, I'll tie back some remarks I heard from Rudy Giuliani several years ago about how New York City responded to 9/11. It's like nothing like that had ever happened in New York City before. You have attacks on 2 towers, planes crashing into those towers. But if you think back in history how New York City responded, they didn't plan for that, but at least they had a framework of emergency response in place where they could respond. And then the last thing I would share about leadership is you have to like people. If you're going to lead people, you kind of have to like them. It doesn't mean you have to like everybody, but you have to like and engage with people. And so those are some of the things that at least I've learned and I try to employ working with the teams that we have. And by the way, I have 2 phenomenal colleagues and team members here with me today. As Skylar said, we've got Don Rappaport and Kimmy Kilmeyer from our LA office. So, but whenever you put out any number, whether it's 5 or 6 or 7, I always like to say, well, what's on the cutting room floor? And I'll just leave you with this. This is something I learned from my dad, who was a great person. I'll tell you a little story about my dad in a second, and it used to drive me nuts when I was in like junior high school and high school. He'd say it because he'd keep reminding me to do my homework, and I'd be like, Dad, I don't need to do this. It's not going to be on the test. And he always said to me, good study never went to waste. And I never believed him until I realized that good study, it can come in handy in the ways you never really realize. But maybe a quick story about my dad, because it does relate to what we're talking about here. So my dad, great guy. He taught me so much in my life. He went into the United States Navy. He was at that time you had to sort of do mandatory service. So he was in the Navy. He was on an aircraft carrier, and ironically, that aircraft carrier, it's called the USS Intrepid, and it's docked in New York Harbor today. But then he became a surgeon, and he was a surgeon for over 40 years. And at the age of 74. Because if you're a surgeon and you're operating on people, you like someone with a little bit of gray hair, but if you're in your 70s and your hands are shaking, the patients tend to get a little bit nervous. So he became a financial advisor. And I think that's relevant to what I'm about to talk about, because financial advice is about helping people. It's about charting a course, charting a vision, and it's about acting in the best interest of your clients. What's interesting is my dad, who passed away last year at age 88, he actually was a financial advisor up until he passed. He still called his clients his patients. So and it's kind of an interesting thing. So how are we doing so far? Okay. All right. Lots of head nodding. So I'm going to transition now, and I'm going to talk to you a little bit about Fidelity, because that's where we work. And I'm going to share with you a few things about what we're seeing in our business, because I think they relate to our society as a whole. And, I think you might find it interesting, whatever your course of study is here. There's sort of some macro trends that are happening in our society that you might find interesting. Take away what you want. Other pieces, you can leave on the cutting room floor. And by the way, I wasn't kidding. I do have 42 slides. We're not going to do all of them. I've got some select ones, but maybe if you like it enough, it'll be a teaser for for me coming back during the ski season and doing the rest of it. Because I left that out. I do like to ski. My kids are snowboarders, though. So quick thing about Fidelity, just to give you a little context. We're a very large, integrated and diversified financial services company. We actually serve, in one way, shape, or form, about a quarter of the households in the U.S. So somewhere in the neighborhood of 25 to 28 million households. And we do it sort of in 4 major business lines. We have an institutional business that services intermediaries, so registered financial advisors who have their own businesses, broker-dealers, and other businesses. Then we have a big retail business. We call that personal investing. And the personal investing is the branches that you would see, or Fidelity.com, the website. And that serves, again, we're about a quarter of the households in the U.S. And then finally, we have a big retirement business. We call that workplace investing. So we provide services for folks who have retirement plans that their company says, I need help, a place to put those plans. I need them to be record kept, and to give my employees access to those investments. And I bring it up because Luke Dean told me, or Professor Dean, however he likes to be called, Fidelity is actually one of the largest employers of graduating students and actually pre-graduating students from Utah Valley University. So thank you. Thanks to all of you for helping us, because any business, back to the leadership, it's all about the people, right? Our greatest asset comes in the door and walks out the door every day, and that's our people. We also do a lot in the neighborhood of asset management. So we have products and services such as mutual funds, exchange-traded funds, and other vehicles that we manage for folks. I'm not going to go too deep into the business I represent, only to this extent. It's a great business because what we do in our business is we work with 3,000 registered investment advisors that are all small businesses that are helping clients. So we work with 3,000 independent businesses that serve 1.1 million accounts and hundreds of thousands of households that are helping folks save for retirement, plan for the future, send their kids to college, plan for other parts of their lives. And what's great about the business that we get to work in, and as you're thinking about your career, we're, at the end of the day, what we do is we're small business consultants. Most of the clients that we work with are businesses that have less than 50 employees and are working with a couple hundred households, for example. But we're helping them create business, create jobs of tomorrow. And it's very satisfying because our clients, these advisors, are doing this to help families. So we get to do something to help those who are helping others. So it's a noble profession. We believe that. And I think that's what's so great about the focus that UVU has on this personal financial planning discipline, because it is a noble profession. It's helping folks. And you can earn a decent living doing it. So I think that is a little bit about how we think about our business. Our business is we want to provide insights to our clients. We want to help them digitize their businesses because the future, I think we all know, it's. I'm looking around the room, I'm not seeing a lot of paper. I'm seeing a lot of laptops, I'm seeing a lot of notebooks, iPad-type notebooks, and that's the future of financial services. It's not the sort of yellow pad and paper, of course. So I want to just introduce you to a little bit about how we see the future of advice. So let me just, by a show of hands, how many of you have a financial advisor today? Okay, so a few of you do. How many of you rely on that for those of you who are raising your hands, rely on that financial advisor primarily for managing your money or outcomes that are derived from the investments? Okay, very few, and it's probably because I'm talking to a bunch of personal financial planners. But still today, there are folks that really, that's their value proposition. It's not about all the other things in a person's life. It's about helping them manage money. We believe that money management has become very commoditized. You can get an index fund, you can get an ETF that'll represent an asset allocated, well-diversified portfolio. So we believe that in the future, to get advice, you have to go what we like to say, going up the value stack. So we think that managing the money, things like managing the money are really a table stake. I'm going to actually go back a slide for a second. Even more so, it's about achieving goals, helping people achieve their goals. whether it's college goals, healthcare goals, estate planning goals, or philanthropic goals. But we believe that to really, as an advisor, go up the value stack, it's about helping people with peace of mind, helping people with fulfillment of their lives and achieving a sense of purpose. So I know there are a lot of disciplines here in the room, but I bring it up because I think this is emblematic of how value is being created across our society. And I'll talk a little bit about that in a moment. What's interesting is that this seems to resonate with investors too. More than half of the investors, want someone who's an advice provider, to focus on elements way beyond managing the money. So you can see that peace of mind and fulfillment are starting to resonate with all investors, and especially with the Gen Xers and the millennials. And we'll get into the millennials in a bit, in a moment. And I guess, for those of you who are in the financial planning discipline and other parts of the financial service industry as it tracks to you, we've done some studies, and the financial services industry is not growing as fast as other industries on just a pure market capitalization basis. And we think that, part of the reason is that there may be sort of a misalignment of focus, that it has been about the traditional managing the money instead of about true alignment toward life goals and happiness. So here's where I sort of pivot a bit into, I think, what's going on in our society as a whole. As human beings, we tend to think of change in linear fashion. So if I were to walk across this stage, let's say it's about 30 linear steps, it would take me 30 steps to get across the stage. But if you think in exponential terms, which is the way technology operates, things like Moore's Law, where, let me just actually ask for a show of it. Are folks here familiar with Moore's Law? All right, I'll do a little bit of a primer. So Moore's Law is a concept from the semiconductor business that the amount of capacity, the speed of a microprocessor will double every 18 months. And in fact, history has shown that it more than doubles. So all the computers we have, if you go back 10 years ago, they didn't have as much memory, as much capacity, as much speed. But technology has this exponential effect. There are other laws such as Metcalfe's law and Gilder's law, which talk about technology around. Think of your phone. In 4G, it might take you, almost an hour to download a movie on your phone. Well, in 5G, it will take a matter of seconds. So these are examples of exponentialism. And I will tell you that that's, I think, the precipice that we're on as a society. 30 steps across the stage, you know how long it'll take me. If I were to take 30 exponential steps, 2, 4, 8, 16, 30 times, all of a sudden that's 2 billion meters. And that's twice around the sun or the earth, I forgot. But I think you get the picture. And what is happening is that we're on this precipice of what we like to call hyper-adoption. And at the center is the consumer. So I'm going to show you a chart in a moment about adoption. If you think about how long it took to have households use the radio or the TV, it took many, many years. But I'm going to show you a chart that I think is really cool. So it took 38 years to get 50 million users of a radio, 13 years to achieve 50 million users of a television, 4 years for a handheld device, 3 years for I think that was a notebook or an iPad, 1 year for Facebook, 9 months for Twitter, and 1 week for Pokemon Go. So what I don't have on this chart is, does anybody here play Fortnite? Does anybody here play Fortnite but doesn't want to admit it? I have to think it's somewhere in that, I've got a 14-year-old, so believe me, I've seen Fortnite. But the point of this chart is we're in this age of hyper-adoption. We're in this age where the consumer is at the center of everything. And so change is starting to happen in exponential format. And, historically, you could wait for, a trial period and early adopters. But what we're seeing is that with the advent of technology, things are getting adopted very fast. And it's coming. They bring it up to the financial services business. Forgive me one sec, because so what I find really fascinating is that this coming to, how many of you would call yourselves as millennials? So born, I think it's 1980 or later. So most of you, I think most of you actually, as I look around. So you are going to be the largest generation in American society soon. So you are right now 75.4 million folks. And you're going to grow to 81 million by 2036. Now, you may be asking me, how are we going to grow? We already were born, we're already here, and it's because of immigration. So that's what the studies show, that by 2036, you're going to be the largest generation in our society. So congratulations. I think I was in one of the smallest. I was Generation X. And as you can see, we're sort of in that 66. We've never crested above that. So, and what does that mean? It means that you are the consumers that everyone is looking after. Everyone wants to be in front of you, whether it's financial services or other parts of the society. And I will tell you, that's a lot of the area that we're focusing on at Fidelity, is how can we really respond to your needs, your growth, and the kind of financial services that you're going to consume in the future. And I'll tell you a few things that we've learned about millennials, and I'd love to hear if you agree with these things. But we've done research. We do consumer research every year. We focus on millionaires. We focus on mass affluent. We focus on those who are what we call Henrys. Does everyone know what a Henry is? A couple people maybe. High earners, not rich yet. And then we focus on those who really don't have any investing. And their primary entry point is, I just need help with my budget. I was talking to Kaysen. I don't know if he's here. There he is. You guys have this phenomenal service. I think it's called the Money Management Resource Institute that provides help with budgeting. A lot of Americans, that's what they really need help with. But the point of it is, what we've learned about millennials is the following, which surprised me. You are interested in getting advice on your finances. You're willing to pay for it, but you're price sensitive. You won't work with someone who's a provider that doesn't offer state-of-the-art technology, and technology matters a lot. And, this really surprised me. Millennials expect outsized investment returns. So, in the neighborhood of 16% a year, which just blows me away. Congratulations. So we spend a lot of time thinking about these things at Fidelity, but I think that, financial advisors, you are the consumers of tomorrow. So this matters quite a lot. So let me transition, and I'm going to stop there with the slides. I'm going to tell you a little bit more about the financial services business that we're involved in, and then I am going to pause and do some Q&A. So I only want to expose you to it because I think it's a great career option. And actually, it's one that I didn't get into, go to college and study to be in the financial services business. I'm kind of an accidental tourist here, which I guess is another lesson for you. Where you plan to be may not be where you end up. And as my wife likes to say, if you don't have a plan, you might end up somewhere else, which for me worked out. And I think for most people, at the beginning of your career. But let me just share a little bit about it, because I think it's a great area to explore. I already told you that it's a business where you're helping people, providing financial advice. Unlike some of the movies and TV shows, it's not about sales necessarily. You might have to go out and find clients, but there are plenty of advisory firms, whether it's small firms that have 50 people or larger firms where they just need someone to help provide guidance and advice to clients, and it's an apprentice-driven business. So there are about 12,500 federally registered advisory firms out there, and these firms manage assets for to the tune of $80 trillion for 30 million households, 50 million households in the U.S. So, there's a lot of opportunity, and it's a growing business. It's growing in terms of the number of firms that are out there, but it's a business that, needs a lot of next-generation talent, and that's why I commend UVU for focusing on it. But the good news about this kind of career is that employers are hiring. Employers of all shapes and sizes, whether the small businesses, the big businesses, or the medium-sized businesses. And if you don't want to provide financial advice, there's a lot of technology opportunities. So there are, dozens of technology firms that provide services that help these businesses deal with consumers. So whether it's on reporting on their financial assets or helping them craft a financial plan. I just learned of a company earlier today called YNAB, which I guess is called You Need a Budget, which is another example of that. And it sounds like a really fascinating company, actually. I wish they had that when I was right out of school. So it's a great business. You help people. And it's actually a place where, the employers are starving for people. So that's something else to think about. It's also a business that, the pay is pretty good. The median salaries are, as an entry level, can be above $50,000 or $40,000 to $50,000 in some places. So here you have a business that is, fairly good compensation. It's apprentice-based, so you learn, and it can open doors for you. A couple other trends that are going on in this business just to be aware of. I talked about that people need advice, they want advice. The advisors are getting older. So there's a talent crisis of, the folks that are providing advice. So they need this next generation talent. The average advisor is, a little bit above 55 years of age. So that's by no means old, but, you have to think about continuing to stock the pond, with new talent. It's a business where not only are the revenues and the number of clients growing, but there's a fair amount of profitability. So if you wanted to, become a part of this business and maybe one day get equity, that could be, a good way to plan for your families and your future. We're passionate about it, and I'm not suggesting you need to be, but if you're looking to explore something that's not necessarily immediately in your wheelhouse, it's sort of a different avenue. So let me just pause. I'm going to pause for some questions if you have any. If not, I always have questions to ask myself, so I always reserve one or two. So let me pause for a moment.
Can I ask a question?
Yeah.
I want to ask one of the class. How many of you have a Fidelity app on your phone? Raise your hand. So there's your favorite students right there. Ask them questions. Anyone with their hands up will have a question. Okay, raise them again. There's the Fidelity app. He has a question for you right there, and the man with the white shirt and tie. Go ahead, ask your question.
Can I ask you a question first?
Yeah, sure.
What's your name?
My name is
Tanner? Tanner? Why do you have a Fidelity app on your phone?
I kind of looked around, and your guys' app was the most user-friendly, and it seemed like you guys offered a lot of, the free exchange-traded funds and things like that kind of attracted me to that app.
So you're a client?
Yes.
Maybe you can ask who has the largest balance.
Thank you for your business. What's your question, Tanner? I'm sorry.
What kind of qualities or attributes do you look for in the talent that you guys seek? And then how
Yeah, no, it's a great question.
Could you repeat the question for the mic?
Yeah. So Tanner's question was, what kind of qualities are we seeking with applicants? And, what are the best ways to get how do you get an apprenticeship, or how do you, I think, get started with a company like ours, I think you're asking. So a couple things about qualities. We hire folks at the entry level. I was speaking to a gentleman at Luke Dean's class this morning who I think, actually, Kaysen did an internship in our mutual fund wholesaling business where we, sell mutual funds, our funds, to intermediaries. But then there was another gentleman who was an associate in our customer call center. And we hire entry level in these places. So generally it's, do you have a degree? Are you willing to sit for, if necessary, some of the exams that are necessary for this business? So there are some exams that if you're dealing with customers you need to take. A very popular one is the Series 7, which basically qualifies you to speak to customers about financial matters. But in terms of the qualities, and I'll get to you in a sec, Luke, do you have an eagerness, a willingness to learn? Are you a team player? We don't always hire folks that have, domain expertise, but, it's about training folks.
I was going to say, our business school offers a Series 7 class that would fit in as an elective to almost any major and would make you very attractive to Fidelity or companies like that.
So Luke said, I'll just repeat his comment, the business school offers a class to help train you to take the Series 7, which is one of the initial credentialing classes. But then, depending on where where your interest is, I mean, we hire folks in our business where you can take a career path to become, as I like to say, a small business consultant in the wealth management vertical. It's very enjoyable because, most businesses in our country are small businesses. And the Small Business Association, the SBA, defines a small business as any business with less than $39 million in annual revenue. So there are a lot of them out there. So it's a great question. Thank you. And thank you for having a Fidelity app. Other question? Yes?
So you said that millennials expect a 16% return. Does Fidelity offer any investment vehicles that have ever yielded that?
So the question was, millennials expect a 16%. The question was phrased as a statement leading to a question. Sorry, it's the lawyer in me coming out. Objection. It was a great question, though. So I referred earlier that millennials, at least in our survey, some of them expect a 16% annual return on their investments. And do we at Fidelity offer any investments that yield that much? And boy, if we could guarantee those kind of returns, we'd have more than a quarter of the households in the U.S., I'm certain. Look, any investing, past performance is no guarantee of future success. And, it's pretty darn hard to get, a 16% return in a normalized environment. What I will tell you and we've done some work, the last 9 years, have been pretty darn good if you just invested in the S&P. The S&P 500, which is a common index of basket of securities that are indexed. And the compounded return has been close to that. I don't know the exact numbers. They've gone down recently, by the way, because the broader equity markets have been, for those of you who follow them, have been pretty volatile over the last couple of weeks. As a matter of fact, just for everyone's edification, you can't escape this if you watch TV. We up until this month, we had entered the longest running bull market for equities in history. So no, good question though. Now, having said that, there's some bonds where you might be able to get a 16% return, but you have a lot of risk. Generally, these are higher yielding bonds, that could default. So, but 16% is darn good. Yeah. So the question was, as a student who would like to work at a registered investment advisory firm, are we allowed to give recommendations? We can certainly, well, first of all, Luke Dean is probably your first stop, or people here in the personal financial planning. But we, as I said, we work with our group, 3,000 of the 12,500 RIAs, and if we don't work with them directly, we know most of them. So, if you wanted to link in with me and we could have a conversation, I could give you impressions. It would never be a recommendation or a detraction, but and maybe just to add on to that, maybe a little bit more. I have 2 minutes left, so I'll come back to it. Let me just see if there's one more question. Yes.
So this is a somewhat detailed question, but in a recent investment news article where you talked about 5 needs of financial advisors in 2019, you spoke about camps and how they're moving more towards more comprehensive financial advice rather than just asset management. How do you see that competing with your current business model?
Sure. Wow, great question, Kaysen. So Kaysen's question. So I have 90 seconds left. I'm going to try to answer both of these together. So Kaysen's question was about something called TAMPs, which are called turnkey asset management providers. So these are businesses that if you wanted to be an advisor, but you wanted to not have to deal with managing money, financial planning, any of the things that sort of are the kind of core delivery of a product, there are companies out there that will help you do this, and you don't have to, do a lot of the heavy lifting other than responding and dealing with clients. If you're a real people-oriented problem solver. And so there are these businesses that have emerged to help you outsource everything about financial advice except dealing with the client. And we've just seen an explosion of these kinds of companies. So they're technology-driven, they're, integrated. And so, look, Kaysen, basically in this financial services market, but driven by technology, everyone wants to make either advisors or consumers' financial lives as elegant and easy as possible. So I guess I would say that we're all in competition or co-opetition. So back to the RIAs, we've done work, and if you want to go work for an RIA that sort of has substance and scale, there are about 700 of these firms that manage $1 billion or more, and I'm not talking about the Fidelities of the world. And these are businesses that are actually bringing in revenue of 10 million or more. So if I were starting out, I'd probably want to work at a larger firm that could offer me 3 things. One, enough revenue to invest in the business, invest in the client, and invest in you, to provide enough scale, and then most importantly, to help provide, an apprentice or on-the-job training program. So happy to talk about, any of these things and more, but it's 12:18. So I just want to thank you. I'm going to try this, listen to this, and I've ended with this before, and it usually bombs, but I'm going to try one more time. So if you've enjoyed this half as much as I have, then I've enjoyed it twice as much. Thank you very much.
Thank you. Hold on just a minute. In case Guy Kawasaki watches this, can we tell him they were only 10 slides, right? Can you remember that? And when I talked to him, he said the 30-point pitch was because you're mostly presenting to guys over 50. But since all these guys are younger, you're okay for violating that rule. Thanks, David, for coming, please.